Retirement. So in retirement for 23-24, the IRA and Roth contribution amounts $6,500 or $7,000. The catch-up amount's $1,000. You do have to have earned income to put money in an IRA, and it must be made by April 15th. The limits to do a Roth are $153 and $228 for 2023, and for 24 those amounts go up. Backdoor Roths are still allowed. If your income is too high to do an IRA, you can do a Roth, you can do a traditional and then convert it. These are some other rules. So in 23, the minimum age for RMDs went up from, it was 70 and a half forever, it was 70 and a half. And then in 2022, it went up to 72. In 23, it went up to 73. So these are for people who had not started their RMDs. If you hadn't started your RMDs, you could wait till you were 73 and 23 and start taking RMDs. This is for IRAs, SEPs, Simples, 401s, 403Bs, all of them. The exception is for a 401 or a 403B. If you are still working, you are not required to take RMDs out of those accounts. You are still required, if you're still working, to take it out of IRAs, SEPs, and Simples. They are exempt from that rule. If you inherited an IRA and the deceased was taking RMDs, you must continue taking RMDs. The only exemption from that is if it was a spouse and you rolled it into your IRA. That's the only exemption. If it was a non-spouse IRA, you have to clear it out in 10 years and you have to still take RMDs. A lot of people were very confused by that because in 2020, when they changed the rule that non-spouse beneficiaries had to clear it out in 10 years, they mistakenly thought because they had to clear it out in 10 years, they no longer had to take RMDs. So we had a lot of people who weren't taking RMDs. So they allowed people in 2020 to not have to pay penalties, but in 21 and 22 and now in 23, they said, no, you do have to pay those, take those RMDs. The Roth IRAs are not required to take RMDs. However, beneficiaries of Roth IRAs are required to take RMDs. They're not taxable, of course, but they don't want you leaving it in there forever to grow tax-free. The penalties for missing an RMD, they used to be 50%. They have now lowered that amount to 25%. So the amount you should have taken is penalized at 25%. So if you were supposed to take an RMD, you missed it, the penalty is 25%. Honestly, we have never seen anybody actually get a notice on that. But we tell people if you realize that you were supposed to take an RMD and you missed it for some reason, we tell people to take it as soon as you realize that you didn't take it. The qualified charity distributions from IRAs are still allowed. You can take that up to $100,000 to defer taxability of RMDs, and we highly recommend these. If you're doing charity anyway, and the standard deductions are so high right now that a lot of people are not itemizing, it's the best way to do your charity, get the deduction on your, off of everything, the federal and the state, because that comes right off your adjusted gross income. You're doing your charity, getting a deduction for it, and still getting to write off your charity, basically. So it's a great way to cover all your bases and still make your charity deduction.